So I want to start with Dr. Hans. Dr. Hans, you've been talking about telco to techco for quite some time. And in some of the forum early this year, you spoke about telco systems had to radically change from an incrementalism, right? I assume we're talking about 2G to 3G. So that era need to change, and we had to change things up. And also these OTT players, there's some presentation we are supposed to share, but OTT players disproportionate ownership of things. So what we look at the numbers, you have roughly about 10 OTT players carrying 1,500 exabyte, 800 MNOs in the middle, and 1,500 infra companies. The pyramid is bigger, and I think the role of telcos had to change. That's where you're coming from. Maybe for the benefit of the audience, if you can expand on that.
Yeah, thanks, Gayan. It's a long topic, but I'll try and summarize it brief as I can. I think telcos are at a very decisive moment in their life cycle. Growth is thinning out, as we all know. Likewise, returns on invested capital are very challenging. In most markets, below the weighted average cost of capital. So in fact, the core telco business seldom can return above cost of capital. And certainly if you look at the TSR of a telco business, again, you see a very challenged environment other than in a few markets. So what's going to happen to telcos? And I think that's a very important question because, and telcos need to address this through radical responses and not incremental responses. That's where I think Gayan highlighted the immediacy of the problem and immediacy of the solution.
Right, so Doc, maybe I just cover this page fairly quickly. So you see this pyramid, and you have the OTT players on the top. You have 8.5 billion total population. Roughly about 5.2 billion are the telecom operators. And then you have 1,500 exabytes. So that's the digital space we are looking at. The pyramid is where OTT players have the bigger share. 800 is the MNOs in the world, and 1,500 are the other infra companies, right? The chart on the right is the disproportionate ownership of the revenue and the valuation. So that's where this gap is. So what you are saying, Doc, maybe there's a role where the infrastructure companies work closely with OTT, or are you talking about the OTTs are getting close to the MNOs, or the MNOs getting into the different category? So,
yeah, I think the stack is very important to look at because you can see the value creation and also the share of value up and down the chain. Now, underneath that, the realization telcos have to reach, or the introspections telcos need to go through, is to ask themselves, where and how will our services be consumed in the future? Will our services be consumed directly as simple data or voice or any form of core connectivity, or will our services be consumed as a part of a solution? Now, in the consumer space, I think we are very accustomed to that. Now with the eSIM coming around, with the phenomenon of app stores and Apple in particular, if you look at a consumer and the consumer's purchasing decision, it is to buy a solution, and the connectivity itself gets commoditized. Now, if you look at the B2B space going forward, the same truth will hold, in that B2B consumers, enterprises, governments, will buy solutions. And if we look at the solution space globally, vis-a-vis the capability of the networks, whether it's 5G or all the deep capabilities that our networks have, demand far outstrips supply. When demand far outstrips supply, you will have growth. It's just that telcos don't play there. Telcos don't actively put their services forward in a way which they can be packaged into end-user solutions. And they do not present themselves on marketplaces. And my mind goes back many, many years, and I spoke about this as a telco moment today, to have that realization of where we should be presented to our consumer. And if you look back 10 years and think of a FedEx, a courier company. 10 years ago, maybe a FedEx or a courier company would have had the realization that, in fact, they would be consumed more and more through the marketplaces, like Amazon or Alibaba or any of the global marketplaces. A very different consumption of their service. And in order to address being presented through a marketplace, a FedEx or a courier company would need to then open their APIs, have value-added solutions, provide superior customer experience right down to the core of their service, but presented through somebody else. So if the telco ego can be put aside, if we bring to the table the strengths of a 5G network, the capabilities which can be exposed via standardized network APIs, and we've heard about the GSMA Open Gateway, we've heard about standardized APIs with Camara, we have heard about the TM Forum APIs, and these can be orchestrated into solutions through partnerships, whether it be partnerships with the hyperscalers or the OTTs, as Gayan referred to them, or whether they could be partnerships with SMEs, innovators, developers, content providers. So the turning point for a telco, I believe, is to open themselves up, also realize that consumers, whether they be B2B or B2C, will not procure the services of a single telco. They would look for full market coverage, so they will look for marketplace solutions which provide access to all telcos in a particular geography or even globally. So the value is out there. And the estimate is that relative to the $1 trillion of telco revenue today, there's another $1 trillion of solution revenue. The question is, can the telcos capture, to the pyramid question,
Yes, yes.
a fair share or a lion's share of that value, which will be offered through marketplaces in the future and be consumed via competitive marketplaces where the telcos can play as underlying connectivity plus providers.
Thank you, Doctor. So I want to open a next question to Dr. Farid with this chart. As you can see, the per capita data consumption, what you and I consume, has grown from 6 GB customer to 16 GB. This is cut across 800 operators over the last 4 years, pre and post-COVID. We try to overlay the share price of OTT players, telcos, and infracos. OTT is the clear winner on the top of it. And you have infra companies are doing reasonably fine, and MNOs is decreasing. I assume this is the balance sheet. The return of every rand you put is not incremental per se. And we try to pretty much overlay the other activities happening on top of it. So with that opening, Dr. Farid, you as a sovereign wealth fund invested in the Axiata, Telekom Malaysia, Time.com, and Astro. Where do you see this digital infrastructure play? So there's a B2C and a B2B. So you take the B2B out of it, B2C component. Where do you see it's evolving, looking at this trend? Any thoughts on that, sir?
Thanks, Gayan. The question is on investment. And, from my perspective, the meaning of investment is twofold. One is investment in the sense of equity investor. Do I invest in Celcom DG? Or do I invest in my friend there, Facebook? Where do I allocate my capital for the purposes of returns? There's another layer to that question, which is, if I'm an operator, what do I invest in? What goes into the ground? Do I buy more servers? Do I buy more fiber? Do I build more towers, et cetera, et cetera? So that's a different level of question, but these two are interlinked. See, one way to untangle that is to look at the demand side. And just like Dr. Han said, telco revenues have tapered off, etc., etc. But actually, the demand for telco services actually has been increasing and increasing at a rate that is no different from the last 15 to, I don't know, the last 15 years or so. And the telco services here, we're talking about the number of bits and bytes that go through the network. The rate of change there has not changed that much. What has happened is the supply of bits and bytes have increased so much that the value per bit has dropped drastically, and the cost per bit has dropped drastically as well. That results in telco revenues being static or even declining. And that's largely a good thing, right? And why is that? That is actually driven off stupendous demand that is triggered by our friends like Facebook and Meta and Google, etc., etc. You know, we in telco for the last 15 years or 20 years have been in this love-hate relationship with Google and Facebook. We're saying, hey, you know, they're loading my network, you know, increasing my costs, etc., etc., etc. But actually, if you step back, the reality is, you know, I came originally from the fixed line business. The fixed line business would have been dead. 20 years ago, fixed line business is dead because the mobile players would have taken the fixed line's lunch. But what saved fixed line? What saved fixed line is ultimately the demand of the consumers. But the consumers don't really care about fixed line. Consumers care about the ability to access Facebook, video, or Netflix, or whatever it is that is made special through fixed line. Right? So actually, the right answer is embracing each other, because collectively, you create something greater. So what has happened in the last 3 years, and probably if you project it going forward, what's going to happen is the amount of usage per consumer, per existing consumer, will taper off. In fact, has tapered off. And the reason for this is the following. Human beings consume data ultimately through two senses, your eyes and your ears. And as of this year, perhaps last year, Facebook videos, YouTube videos, etc., has already gone HD to an extent that no reasonable human being can differentiate the quality anymore. If you double the definition, you ain't going to see the difference. So likewise, Spotify, it takes an extreme audiophile to tell the difference in quality between Spotify and, you know, that black turntable thing. It takes an extreme audiophile, and that's a very, very small percentage of the population. So what has happened is the human senses tapped out. There's no amount of capacity that we push in that will change that. Because the other senses that the human beings have, touch, you know, heat, etc., the engineers have not figured out how to encode it and transmit it. Because we have not done that, and we're only able to encode sight and encode sound, we are done. So therefore, what is going to happen in the next 5 years is not the consumption per existing user, but actually A, new users, B, a change in behavior because the consumption side is done, but the production side is not done yet. More and more people will be producing their own data. You already see that, TikTok, Instagram, etc. So that's the second change. And the final change is at the telco level, perhaps not so much that we can see, but the next level of change is all this is going to make the processing of data a lot more complicated. And therefore, the next level of infrastructure play is not the transport of data, but the processing of data. And therefore, that's where semiconductor comes in, that's where data centers come in, and that's where some form of transport to these data processors will come in. But it's no longer probably going to be a game of mass deployment of transport, like we have seen in the last 15 years. So that's the major change.
Yeah. So I'm going to stay in the same page to Vikas. So Vikas, you and Macquarie balance sheet, you put in money on your own balance sheet. So you have done 3 investment recently, Pill Towers, and at the Cloud Excel and the Charge Zone. These are 3 investments you made. Do you see your investment horizon getting different looking at this chart, or any other trigger points you think the industry could see better?
Yeah, thanks, Gayan. So look, I think all of those investments, very different regions, right? So Bill Towers in Philippines, Cloud Excel in India, Gigacom Fiber investments in Australia.
Right.
What's really intriguing to us at a more macro level is we're super excited about APAC. Now, Macquarie Capital global team heavily invested in Europe and US as well, but when we get together as a team, the growth prospects that APAC brings to the table are truly incomparable to the rest of the world, and we think the outlook is super bright. At some point by 2040, depending on which estimates you want to believe, APAC will contribute about half of the global GDP. So we see that opportunity, and we see it that there's obviously room for capitalizing that. I think overall, digital infrastructure as a theme, notwithstanding what Dr. Hans and Dr. Farid have said, is also super attractive, both in terms of infrastructure but also processing. Even just as early as this year, we saw BlackRock acquire GIP, and it's clear that there's a lot of potential and growth remaining in this market. And when we look at each of these investments, the path to monetization is very clear.
Right.
I don't think we are at all dampened by our efforts or the macro issues that we're seeing. I think there's a lot more that needs to happen in APAC, right? So
Right.
a lot of these investments that we're seeing in fiber carve-outs, and we've done this work in Europe, for example, investing in fiber companies. That theme is now starting to pick up, say in Indonesia, for example, right? Obviously, when we look at some of these infrastructure assets from a demand perspective, which I know has been touched on, we've seen a lot of good growth in customer demand, but telcos, to be fair, have been challenged to meet their cost of capital, particularly over the last 3 to 4 years. I think the only region which has done well in that regard has been the US. And we're seeing that change, right? So if I look, I was just before we, got up on the panel, I was looking at the next 3 years sort of EPS estimates for telcos, and a lot of select telcos in the region are very well positioned, whether it's CDB, whether it's Indosat, whether it's True in Thailand. We're seeing double-digit EPS growth expectations, in some cases even more. So whilst the chart here is showing an aggregate number, I think there's pockets of growth which get us all very excited, and that also drives our infrastructure thematic, right?
Thank you, Vikas. So for the next topic, I'm going to Vinod. Before I go into the Vinod, this is what Dr. Farid was talking about, right? Is data going to grow, right? We still have 1 billion people not connected, and Dr. Farid was talking about 2 of human senses out of 5 are the only connected. We haven't figured out how to connect the taste, touch, and the smell. We also have this AI digital content coming out, and the screen convergence, meta glasses. And the negatives are there's so much people can consume. People have crossed the 6 hours of screen time a day. We can't consume more than that screen time. And also you are working with various MNOs to optimize the traffic, right? So the question to you, sir, of the 1,500 exabyte, 30% is you. And if you look at the last 5 years, 90% of growth is you. I'm asking the question, how do you manage this? And how do you go from here to provide better quality of service to the end consumer? Because we are collectively together, investors are, and the MNOs, and we are collectively together. Technically, we all employed by you. So how do you manage this?
Yeah, thanks, Gayan. So exactly, so we represent about 4 billion subscribers, monthly active users, and across 4 apps, Facebook, Instagram, and WhatsApp, and Messenger. So for us, quality of experience is key. And so with that narrative, we partner with operators globally to look at end-to-end quality of experience for users. So the users mean both, our users plus the MNO users operator users as well. That's where they make most of the revenue, right? 30% of the traffic. So it's, when you look at this end-to-end QoE, we look at it in two lenses. One is, how do we optimize meta infrastructure to deliver a better quality of experience efficiently, optimized, and timely manner to the CSP. And that's a one lens. And there we invest a lot of money. For example, for the last 5 years, we have invested about $150 billion. And 2023 is about 30 billion. So this year we are coming close to 40 billion. And next year is going to be more because of the AI play in place. So as Dr. Farid said, we are going to invest more on GPUs, data center, as well as the edge as well. So that's one part where we optimize our network. And then when we hand over that content to the operator, and we run various programs with operators to optimize that last mile to deliver that content or the packet to the end consumer. So where we run, video optimization, that is where we actually work with operators to either reduce or increase the data usage. For example, in Europe, what we have done is we actually reduced 20% of our egress, which is the data coming into the CSP network, so that operators can manage their CapEx or the operational expenses better, where we don't see any sort of degradation in terms of the customer experience. So we have optimized our products so that we can actually deliver better customer experience with a lower cost for the operators. Where Vodafone has, I don't know if I'm not mistaken, it's about more than $100 million saved this year. Telefonica, 100 million. Orange is 100 million. And on top of that, there's OPEX savings as well on power. So in APAC, so it's a different narrative because given the prepaid market, so we don't do that kind of reduction in terms of egress, so that we keep the operators' data stream intact. And then we work with, like, for example, the WhatsApp, which is called Vamos, where we work with all the operators to enhance the quality of experience for the WhatsApp. Now, if you look at in Malaysia, 80% of the calls are being made on WhatsApp. Right. Only 20% is on normal calls. So it's an important a communication medium for the consumers. They judge the quality of the network based on your WhatsApp call. So it's very important. So therefore, we engage with operators globally to enhance that.
So, Vinod, can you deep dive into this AI growth factors, the three areas? I want to ask that question. Yeah. So where is the growth in data through AI from your perspective?
Yeah, so before I go there, I think just want to add the one point to the Dr. Farid with the Wi-Fi and the mobile. So when we look at the total, data of our network, 80% of the data is consumed in Wi-Fi, actually. So it's only 20% on mobile. So even with that, we do a lot of stuff with operators to do the right thing. And to address your next question, Gayan, on AI, I think when it comes to the immediate three use cases I see is one is your personal assistant, and where everyone will have your own personal bot or the assistant, either on your mobile or on your smart glasses, and where you will ask any question. I mean, I use it every day now, and to optimize my daily routine, and I book my tickets, everything on my personal assistant. So that could add to the organic growth, which we see about 10 to 15% across the board, and that could be a one use case. The second one is, I personally believe that language translation will be the next use case for the world. I think that's been one of the a difficult use case to solve. I think with AI, within the next couple of years, this will be resolved. Yeah. And the third one is the content creation, where everyone will use AI to create more and more content, which will drive more traffic to the...
So, Doc, you are telling that the data is going to run out and tapering. He's saying AI is going to drive the growth. Do you disagree with him?
it's driving his revenue growth, yes.
Yeah, okay.
It's a question of perspective, right?
Right. Okay, so with that, I'm going to Vikas. Vikas, what are the trigger points where, question is very simple. I mean, we're not going to the business cases of various investment you have made. We're not going to go there. But what trigger points, I mean, none of the investment or most of the investment we made in infrastructure space post-COVID have not been monetized yet. What trigger point will arrive us at an investment destination where their investment grade and monetization will take place? What are the trigger points in your mind?
I think it's first important just to set context, right? So there has been a rebound. We are starting to, as I was referring earlier on, we're starting to see earnings growth take place. We're starting to see 5G, for example, being deployed a lot more extensively. It's fair to say that the 5G deployment was slower than expectations, but it's starting to recalibrate. And I think even if you look at APAC as a region, I think there were close to 50 to 60 deals done last year, contributing around 30 to 40 billion in terms of overall investment. And clearly, we're starting to see that the market is getting excited again. I think with APAC itself, yes, regulatory issues, access to capital can be a challenge, which has led to delays and the path to monetization being extended. But we're very excited about what the region brings to the table, which is why we're so heavily invested in this region. But if I look at some of the trigger points, if you may, a young and savvy population, right? I mean, compared to the rest of the world, Asia has, I think we were seeing before, mobile-first usage. There's a real desire and hunger for this sort of infrastructure. There's areas around government incentives. So, I mean, I know this is a TowerXchange focus, but we invested in EV infrastructure business in India, supported by government initiatives like FAME2, right? And that really drove upside for us in terms of, driving EV infrastructure growth. I think, not dissimilar to the rest of the world, decarbonization, digitalization, maybe deglobalization are all themes that will continue to be acting as trigger points in this region as well. And then if I look at just specifically on the telco side and some of the customers that we're working with at the moment, it's such a strategic geographic location. Each market is obviously very different, but we're starting to see a wide variety of capital intensity across these markets.
Right.
So if I look at it across the board, we'll start to see select capital being deployed, and they will also act as trigger points.
Thank you. So on the extension of that to Dr. Farid, infracos, the B2B infracos, how could we create value its capital contributors? Any thoughts on that, Doc?
There's essentially the tower core,
Yes?
the fiber core,
Yes.
data centers.
Yes?
Roughly speaking, I'm sure there's
Right,
others.
correct, yeah.
But let's keep it simple, right? And your question is how to create shareholder value, right?
Yes.
I guess the simplest would be the tower core. The tower core at the very end of the day serves MNO. At the very end of the day, MNOs ultimately serves the customers, their B2C businesses, etc., etc., etc. But ultimately, you serve the telcos, MNOs. And as you've heard, MNOs, whilst EPS expectation is going to expand, ultimately it is a continuation of what's been happening over the last 3 to 5 years, which is essentially all about improving customer service in such a manner that your cost is well controlled because the prices are static. Prices per bit is going to decline, in fact. So revenue per user, if you can keep it static, is already great. If it falls slightly, that's normal. So in that scenario, an MNO has no choice but to be ever more efficient. And since a TowerCo serves an MNO, it needs to have that same mindset. It needs to be ultra efficient as well. Efficient in terms of speed of deployment, but more importantly, perhaps as importantly, is cost to serve ultimately. So it's all about helping the MNO to be even more efficient, just like our friends in Meta has done, right? Well, what's his business got to do with optimizing networks of the MNO? Nothing on the surface, but actually it matters to him because ultimately an efficient telco will invest more so that the people watching Facebook videos or WhatsApp videos can get good service. And likewise, the only way for a towerco to make good money is by being good suppliers to MNO. And therefore, the problem statement there is how do you make MNO be more efficient in its network deployment. And then we have the fiber core. Fiber core, that's the FTTH side, so that's not so relevant for this discussion. It's more the fiber to the businesses, or rather fiber to the carriers, I guess, the DCs and so on and so forth. To me, that one is the same issue as the tower business. And then there's the data center side. This one is a bit more complicated. The DC game, the DC game is very tough. Because the demand for now is extremely high and extremely fast, but the problem is, unlike the growth in mobile before this, when you can actually see the number of users that will ultimately have a smartphone, you don't know where this will end. So when is a situation of oversupply coming in? It's very hard to estimate. So therefore, again the right answer is don't be too clever. Ultimately, follow your customer. And your customer, in this case, as a data center provider, will ultimately be our friends like Meta, Google, etc., etc. Work closely with them and match their demand. That's the only game that you can play. If you be too far ahead, then you're at risk. Thank you.
Doc, what do you want to look forward in next 12 months from now in the telco space? Any thoughts on that? Top 3 you want to look forward to?
Telco space, what I'm looking forward to is for it to be extremely boring.
Right.
It has been too exciting over the last 3 years, and so some boringness would bring some sanity.
Okay.
That's what I'm hoping for.
Thank you. Maybe Vikas, Macquarie Capital, any thoughts for the next 12 months?
So I think what excites us is the interest rate environment will hopefully start to soften over the next couple of years. Nothing too exciting from an inflation perspective. And hopefully what we'll start to see is use of more alternative investment structures like securitization. And what we're seeing already is instruments like preferred equity is starting to bridge valuation gaps, but also expedite deal making. So with all the figures that we've shared so far, we expect to see opportunities in deal making grow over the next few years.
Thank you. And finally to Dr. Hans, I'm not going to ask you a telecom question. So Doc, you've been appointed as the government chief digital officer for Sri Lanka. So any thoughts and of your journey? You want to share some thoughts with us?
No, I think it's about citizen and enterprise journeys. I think we have to, when talking about digital transformation, you have to look at who's consuming that digital product. And when it comes to nations, it's about the citizen, it's about businesses, and it's about peer government entities. So G2G, G2B, G2C. And very much like in the telcos, where we spend a lot of time on customer experience, on journeys, on fine-tuning our CRM systems, etc. So I think simplifying it, it boils down to focusing on the journey and continuing to modify and improve the journey. And in this game, I guess AI would play increasingly important role.
Yeah, thank you very much. That's all for us this morning. This panel will be there in case you have questions. Thank you very much, everybody, for your patience.